Hello, everyone. I'm Charles Bedford, professor at Hong Kong University of Science and Technology at the Division of Environment and Sustainability and the Institute for the Environment. And this is the podcast on smarter carbon. Today's guest is a professor and an entrepreneur and brilliant mind who is, I'm very excited to introduce Elias Ayrey, who has a great background and a great history of thinking about the carbon markets from a science perspective. Most of the work we've done here on this podcast has been more around the policy arena and sort of background around the carbon markets. But today we're going to dig into some of the what we call the sacred cows of the carbon markets, both from the policy and the technology and science perspective. So that's what we'll do today. Elias, will you do a short introduction of yourself and tell our folks what your background is?
Yeah, thanks for having me on. My name is Elias. I have a background, my Ph.D. is actually in forest science / remote sensing. And I've been working kind of in the carbon space for the last 10 years or so. I did my graduate work trying to quantify carbon using remote sensing tools. And then I moved into industry in 2019. I was head scientist at a technology startup called Pachama, which was basically focused around using remote sensing to evaluate forest carbon projects. In September of 2021, I left Pachama, and I'm basically trying to kind of start my own thing as a co-founder and basically review forest carbon projects publicly so that everybody can know which projects are good and bad. So that's where I am today. Awesome.
Thank you, Elias. The forest world is a tricky one, right? The RED projects and the RED sort of methodology has been around a long time, but there's still a fair bit of complexity and difficulties in sort of everyone seeing eye to eye and understanding it from a common perspective. And I think bringing that kind of rational notion to this is I think is a really needed in this time. So I'm sure you'll have some traction on the with this enterprise. We have you and I had a conversation or sort of email conversation back and forth about a number of these widely held beliefs that may or may not be correct in the carbon market, and what we call the sacred cows of the carbon market. And we thought we'd just sort of take them one by one, if that's all right. And our audience is generally, I think, pretty well acquainted with some of these things, but we may have to do a little prep work ahead of time. The first one on the list that I thought was interesting, and I'd heard you talk about a little bit before, are what are called jurisdictional or nested RED projects. And can you explain sort of what people mean when they say a nested or jurisdictional project, just from a definitional perspective?
They mean if you're establishing a bunch of projects within a certain jurisdiction, like a state or a province, that kind of all of those projects need to be kind of evaluated together. It also kind of overlaps with concerns that maybe the country that it's in has set some sort of climate goals, which may conflict with the projects themselves. And so the idea of nested projects is basically to account for all the conservation work that's happening within an area and make sure that credits aren't being double counted or something.
And are there any good examples of jurisdictional projects out there that you know of? I haven't, frankly. I think there's been one maybe issued in Mozambique through the Forest Carbon Partnership Facility, the World Bank's, but it had I don't believe the credits are actually available. Do you know of anything else?
I'm not aware of any. There's a big push towards, kind of shifting the way we think about baselines and leakage in the future, but I don't know of any that are truly jurisdictional now. Although honestly, I haven't spent too much time dwelling on the issue. I usually deal with a project by project basis.
Yeah, and what's the what are some of the downsides to looking at things from that perspective? It sounds good, right? I mean, let's do this at a bigger scale. Let's make sure that all these individual actors are coordinated, and maybe even we can force counties, countries, state, provinces into kind of a more coherent land use planning at those jurisdictional scales. Sounds okay. What do you think the downsides or the issues that might come up on those?
Well, I guess, I think we should highlight the upside, maybe, if that's all right, which is that it kind of eliminates the idea of leakage in general, because, if you're looking at the entire jurisdiction and kind of evaluating climate benefits that way, then you can't really say that somewhere else in the jurisdiction deforestation took place because of this project. And it also really helps with this double counting issue, which is increasingly becoming a problem as countries make commitments. I think the downsides have to do more with how, what's kind of being proposed right now. So I don't think there's anything in concrete, really. There's a proposal by LEAF that's kind of working its way through Vera, which I think Vera just put something out on. And one of the downsides that I see is that it may act to funnel credits in kind of away from the areas that really need it. And so, for example, if you've got a jurisdiction in which deforestation is really high, under this approach, projects inside that jurisdiction are not going to receive many credits because, supposedly the jurisdiction hasn't done a good job, and therefore the projects there's leakage involved. Really, in all the cases that I've seen this take place, those projects are extra essential. Like, those are the projects that matter the most because they're taking place right on the edge of deforestation. So my concern is that it's going to funnel credits towards projects in jurisdictions where deforestation isn't really a huge risk to begin with. I think another big potential drawback to this is, as with all of these things, you have to come up with kind of a hypothetical scenario of what would have happened, like a baseline. The baseline under a jurisdictional approach would essentially constitute a risk map for the whole jurisdiction. And there is, of course, ways in which, someone like me who's really well tuned to like how to put together these risk maps could game that system, could create risk maps that are not really right, or it could place projects in areas and kind of gerrymander is one term in the United States that we use. Basically, I put projects in only places where the risk map tells you that it's really, really high. And so if those risk maps are not done properly, then you could end up in a situation where projects are potentially being issued with too many credits. So that's another concern of mine right now. But.
Interesting. Yeah. So the sort of the two problems are this kind of a macro problem of like you're moving money away and moving efforts away from places that really need it, where you can actually make a difference. Kind of low governance, high deforestation realms into places which maybe not much at threat. So, which brings into a whole question of sort of additionality itself, right? I guess if you're thinking about it from that perspective, I mean, and then the other piece which you're sort of articulating is this kind of the baseline, and how do you kind of understand the baseline in these jurisdictions too broadly, too narrowly, and how do you decide? Is there a case to be made that we should just assign a deforestation rate to everything between the 23rd north and south parallels, and just let people go and run at it and use that as a deforestation rate? Doesn't it seem like to you like it's a bit too complicated, this system?
You mean like a single deforestation rate for the entire world?
Yeah, why not, right? I mean, we got to get busy on this, and I'm worried that there's the levels of complexity and the levels of trying to have to invent alternative universes in order to get yourself a credit, essentially make it quite difficult to do so. Whereas if the world agreed on, okay, we know we've got a 0.73 deforestation rate, let's get going. If you got a square meter, you could sign up for a payment on it.
Well, I mean, the problem is that deforestation is a hyper-local thing. And, a single river passing through a portion of the Amazon may be an impenetrable barrier to deforestation, crossing that river. And so in some way, it does need to be modeled kind of more locally. I think, because, otherwise you could end up in situations, and you will end up in situations where the financial incentive is just to preserve forest that's not really at risk, because then you don't have to put any money into actually preserving it. It's just there to collect.
I find that that's generally a view that people take in this industry, and I think it kind of comes out maybe out of the roots of the industry in the NGO and the government sector, that essentially there isn't enough money in the world to do the work that needs to be done, and so we need to prioritize those kinds of investments. Is that sort of the way to think about it? And so you don't want to throw money at stuff that's probably preserved or going to be preserved or isn't so threatened, and you want to throw money at the stuff that's more dangerous. Is that kind of fair?
Yeah, I mean, you can think about it in a monetary way, but you could also consider that every one of these credits is going to offset real pollution that's taking place. And so we need to be absolutely certain that this is an area that was going to get hit. And, time and time again, what history has shown is that if you give people a way to kind of manipulate the system, they're going to rig it so that they get credits. Very recently, there was an example put out by Carbon Plan where in California, in the US, basically people were placing their projects only in geometries that really favored the issuance of more credits. So basically, there was just this single number that covered most of the state of California. And people were only putting their projects towards the very edge of that border where that number ended, where the forest type was a little bit different than the average. And they managed to get a lot more credits that way. And so, I mean, historically speaking, people have been very clever in the way that they've been able to kind of rig these projects to get.
Yeah, I guess my point, though, is it presumes a world of limited resources, right? And that we have a limited amount of money to do forest preservation, forest conservation. Whereas if you sort of look at it from the opposite end of the spectrum for this is a must-have. In order to pass through the climate keyhole in 2050 and 2080, we actually have to have preserved and restored every possible hectare of forest across the planet. And it actually doesn't matter what amount of money we throw at it, because it's an imperative. It's an absolute imperative from a human survival perspective. So I always, I understand the sort of the arguments around, well, we don't want to let the corporates off the hook because by having them offset, you use an offset, and that's not quite as much as it's being said to be done. I understand that. But I keep coming back to this notion that the first time in our history we actually have a set of flows that are meaningfully going to conserve forests in low governance south countries of the global south is now. We've had aid flows forever, but typically those went to governments. They were skimmed off. They went to beltway consultancies. They went to they established a few national parks, which now are being grazed and cut. It seems to me like a 70-year run of failures from the aid perspective. And I wonder if this piece by piece approach, project by project approach isn't actually, a solution. Imperfect as it is, at least it's one solution.
I think maybe at the national level, an approach like that is reasonable. My concern is that these are offsets that really are going to emitters. And I don't think that we should necessarily confuse conservation with offsets. Conservation is tremendously important, but if we're actually going to be selling these credits to make up for real pollution, then I think that there really does need to be a one-to-one tie that's really backed up by very strong evidence.
Gotcha. Yeah, no, I think it's a compelling case. I'm biased by my conservation background, and I guess a view that you're starting to see, imperfect as it is, indigenous peoples in the Amazon or in Africa, Asia, actually getting paid for the services they've been providing the rest of us, for the first time. And so I'm just wary of anything that kind of interposes in the middle of that kind of a system. that adds complexity or puts barriers in that place. One other critique, which I'm curious what your thoughts are of the nested or the jurisdictional RED projects, is essentially that they do put government in the middle of local governments, national governments, the forest minister, in low governance countries in the middle of this new market in a way that could be just a license to steal from those projects and from those local and indigenous people who are up till now, theoretically in some cases and not in others, unfortunately, getting paid to preserve the forests. What's your sense of that? Is that another infirmity of the JNR project?
Yeah, I mean, I think that's plausible. It depends on how these protocols are implemented, and hopefully they could be implemented in a way that ensured that the money got to the right place. I guess my philosophy is a little bit the opposite, in that if we really want these things to work, we need to stop trying to create these mega projects that are 50,000 hectares, consisting of 10,000 people in these areas, and really zoom into like really small landowners or people who should own the land, and get these projects on a really local level. And I think there's a couple of benefits to that. One is that you're ensuring the money actually goes to the guy who owns the land. The second thing is that it will ensure a higher level of success. If it's just Farmer Joe sitting on his porch making sure that nobody cuts down the 100 hectares behind his house, that's got a much higher level of personal investment than owning some part of a project that's 50,000 hectares. And so I would love to see these things shrink. I would love to see the system get simplified to the point where we can just issue credits on a very hyper local level.
That's I'm absolutely with you. That will require simplification of the accreditation and verification process, of course. And I've seen a few instances where you have kind of honest brokers, not in the broker sense, but honest sort of intermediaries putting together groups of small landholders to do this sort of thing. Actually, one of them is quite interesting. It's in the Colombian context, and it is done by essentially forestry engineers, a group called Forestry Consulting Group, and it's done under the Sur Carbono standard, which is a local standard in Colombia that sprung up around the fuel tax. And the Forestry Consulting Group has kind of figured out a way to sort of very transparently kind of go into a community and sign people up for 1 to 2 hectare plots of land. I mean, really small, to do reforestation. Not just avoided deforestation, but reforestation in that scale, and then figure out that, the stream of payments that would compete against cattle farming or small scale agriculture that would make that attractive to this group. So I'm absolutely with you. I think that's one way. So I guess what we're both saying is, for jurisdictional and nested RED projects, it really depends. Depends on the country, depends on the jurisdiction, depends on the size, depends on the benefits flow, the science behind it, and I guess like everything else, it depends, right? It depends on the quality.
Yeah.
Well, let's move off nested. And we didn't kill that cow. It's still out wandering around. It's still sacred. We're still hopeful that these are projects, or these larger projects, can be done in a way that's got integrity from a carbon perspective, that has good flow. All right, we're moved down the list. Not a sacred cow. You recently talked a little bit about co-benefits. And basically saying, and this is for the benefit of the audience, this is the notion that a carbon credit is meant to be a ton of carbon that's being grabbed or avoided, removed, grabbed from the air, or avoided emission, and we should really just focus on that. And that the market has started to value essentially the story or the other benefits, the SDGs, sort of the poverty alleviation benefits, the biodiversity benefits, et cetera. and that those criteria shouldn't be relevant in the context of this market, that the price of a ton of carbon should be the price of a ton of carbon, and we should sort of equalize around that. So to talk to us a little bit about that. Why you think like that's the case? Why do you think the market's gone on the opposite direction?
Well, I guess what I see happening is there's big differences between the quality of different carbon projects. You know, some carbon projects have been tremendously successful and some haven't. And unfortunately, we have a system here that's put in place by Verra where there's no real mechanism to stop carbon projects that haven't. You know, the projects that have been completely deforested still have their credits on the market. And this is obviously not doing anything to stop climate change. What I would like to see is the value of these carbon credits more tied to the success of the project. It's often not right now because there's no transparency around which projects are doing well from a climate point of view. You know, Verra doesn't really tell people. You read the verification reports and they're glowing, and they there's about a half dozen ways in which you can kind of rig the numbers to make it look as if you're doing okay. And you know, my problem with co-benefits is that by entangling community co-benefits with climate outcomes, we've created a situation where there's a tremendous incentive to basically make sure that the project keeps going. There's a tremendous incentive to make sure that you're brushing any issues with the climate side of things under the rug. And so I think that there are very good people out there who are now incentivized to basically falsify the reports about their projects, rig the numbers in their favor, create baselines that are far too aggressive so that the community gets more money. And we've created a system where projects that have really strong community benefits are essentially not allowed to fail. They're not allowed to, like, you know, commit, you know, basically acknowledge their climate failures, because to do so would be depriving the community of this money that it's receiving, which would be disastrous. And so it's really ugly that we've entangled the climate benefits with the community benefits, and the climate benefits are usually the ones that lose out because it's so much easier to kind of manipulate them. Because that's been my experience so far. Do you want to?
Yeah. So I mean, what's your solution on that? So obviously better science on the carbon side, right? And sort of better monitoring, better understanding, better enforcement of Verra rules, of other registry rules around how to kind of count for these things. You know, how do you differentiate between, you know, a ton that's got high integrity science in place A versus a ton that's got high integrity science and monitoring in place B, but one is, you know, benefiting the community and doing a whole bunch of other things, biodiversity, you know, et cetera. And the other one is not. One's just purely a industrial removal project of some sort.
Yeah, I mean, to be clear, if the two were equal, I would always obviously pick the one that had a lot of co-benefits with it. But rarely are the two equal. I mean, most of the time there are dramatic differences between the outcomes of different projects. And so if you are doing your due diligence about the actual value of the tons before you go and use these credits to actually offset your pollution, then obviously you should then pick the one that has the most benefits.
Yeah.
But if you're not doing the due diligence, you have to make sure to do your due diligence. You asked what my solution is. My solution is to shrink the size of these projects, because, you know, right now we're in a situation where if a 50,000 hectare project fails, nobody's going to let it fail. Verra doesn't let it fail. Verifiers don't let it fail. There's a dozen ways in which they can cheat. And I mean cheat. I mean they come up with all kinds of ways. To my knowledge, the Verra buffer that's used as insurance policy has never actually been used, despite all of the controversial Verra projects that exist out there. So obviously, there's some rigging of the system here. If the projects were small, if we're talking about 100 hectares here, 100 hectares there in these communities, nobody would have a problem saying that this guy didn't protect his forest. We have a problem because the projects are huge. So that's my solution. Yeah.
And let me give you the opportunity to do a little bit of a commercial for your new endeavor. So the way I understand where you're headed in terms of your next entrepreneurial outing, you're sort of saying we're going to put essentially a discount factor on every project from a carbon ton perspective, so that somebody would get, they say they sequestered a ton of carbon, but you've looked at it, remote sensing, LiDAR, good technology, and you basically looking at it saying, well, yeah, not for 2017, that more of a 0.7, and we'll give it a 0.7 on that one. 2019, though, they knocked it out of the park, and it was a 1.3 tons. And so you would essentially give somebody, a corporate buyer, then essentially a tool in which to adjust price. And so you would say, okay, well, if there's two equal 2017 credits, they're both ranked 2.7. Well, then let's go and buy let's go and get the one that has a greater community benefits. So that you're sort of trying to equalize things from the carbon perspective, and then the market can dictate what it needs from from other criteria perspectives. Is that fair? And do the commercial yourself. I just did your commercial, so.
Yeah, exactly. The price should be tied to the asset itself, which is carbon. And right now it's kind of not, because it's nebulous. And the problem right now is that nobody knows which projects are good and bad. Nobody, unless you've got some remote sensing scientist on your team who's looking at satellite imagery, you really don't know which projects has not prevented deforestation. And so, our goal is going to be initially to review forest carbon projects using a very public rubric, using a set of, basically remote sensing tools and grading guidelines, and finally actually put a number to say that, if you buy 1 ton of carbon from this, maybe you're only actually offsetting 0.7 tons. And if we can tie the pricing of these credits to the actual carbon outcomes, then everybody's going to be incentivized to do a better job. So.
Yeah.
And I guess the other big component is, like, there are a bunch of rating agencies out there right now, but we want to make this stuff public. Because the world needs to know which projects have been deforested. Essential to meet our climate goals, so.
Yeah. Well, that's right. I mean, that's the thing we need to know. And I like your approach. It's different than the other ratings agencies. Can you kind of explain a little bit about that difference? Because it's my understanding the other rating agencies, they're thinking kind of more about like the likelihood or probability of a ton being a ton, where you're actually applying a specific discount factor.
Well, I mean, I think that these same conversations are had at all these other ratings agencies. Some of them have conflicts of interest where they really don't want to put a score to a project. And so you end up with like a ratings agencies just giving all the projects like AA+ ratings or something. We want to actually put a score. We're not going to have any conflicts of interest. And I think what just differentiates us the most is that we want to make all of this stuff public, and we want to shift this whole space to a freemium approach, because it doesn't do anybody any good ultimately if only 20 of your customers are really able to know if this project is good or bad. We're trying to make this work for the whole planet. We're trying to make it work so that people can invest in the projects that are good and drive up the price of them. So it only makes sense if you actually make this stuff public in the end.
Yeah, and that sort of baseline currency that you're trying to create is, I think, a needed one, right? If it's a ton of carbon, it's always a ton of carbon, but the baseline here, the discount factor or the premium, in terms of is, I think, a super important point. So good luck to you on that enterprise, and we'll look forward to seeing how you can get it to take off.
I will say there's not necessarily. It's not necessarily that projects aren't always doing good. There are plenty of projects out there that are just too conservative in their numbers and are probably doing a lot more than they're saying they're doing. So we want to see those get rewarded too.
Interesting. Yeah. There really isn't all the methodologies, and then there's, 1,000 of them across the whole carbon market, and all of the bolt-on kind of modules that you can do probably make that even more. Makes for a pretty confusing market, right? And sort of rationalizing that, bringing some sort of level, kind of coming back into a single standard, a single ton as the currency is, I think, a really important piece to bring to it. Right now, I think there's a lot, the market, the carbon market, the voluntary carbon market is kind of slowed a bit, I think, because of the lack of certainty. Of what they're buying, right? And people are anxious about, if you're Microsoft, you don't want to get slammed by the enviros for buying a project that might not have done exactly what it said it did. And I think all of these projects, everyone that I've looked at, has its weaknesses and has its, everyone I've seen, you can write a negative story about it. If you're sort of thinking about it from the marketing department of the company, you just don't want to be associated with a negative story about the thing you've just tried to do a good thing with. So fair points all on that. There are three big sort of holy sort of grails, sacred cows of the carbon markets that I think have that add a kind of a level of complexity and maybe needlessly, maybe not to it. The additionality, leakage, and permanence sort of trio, the holy trinity of the carbon market. Let's call it that, since we're using religious metaphors. Talk to me a little bit about some of the rationales behind these tests that have to be met, and then some of the difficulties. Let's start with additionality, because it's the one where this is my kind of take on it is this is the one industry in the planet where we require ourselves to write multiple science fiction novels about the future in order to get ourselves a subsidy. I suspect the oil and gas industry, which has been going at subsidies for 150 years, never imagined that they needed to write a science fiction novel about the future to get themselves a subsidy, and they're benefiting from $1 trillion subsidies as we go forward. Tell us, that's my critique of additionality. It's very high level. Tell us a little bit about the need for it, and then the problems with it.
Yeah, I mean, fundamentally, the question with additionality is, is this project justified? So without the existence of this project, would this carbon have been sequestered from the atmosphere? And it gets quite tough because there's major additionality challenges with all three project types, avoided deforestation, reforestation, and IFM. And, in terms of percent breakdown, there's not a particular project type that is really better for additionality than any others. In terms of avoided deforestation, the question is simply, was this land actually at risk? Because, there are instances of Vera projects taking place in untouched Amazon rainforest with no road access, deep up, you have to take a boat up a river to get to it. It's owned by an eco lodge. And there's just no chance that they actually would have been able to financially harvest this timber. And so, these are real credits that are going to offset pollution. So you have to make sure that these trees were actually at risk. The same thing can be said for a bunch of improved forest management projects. Now, these are projects that take place mostly in the Americas, so Mexico, the United States, and Canada. And the idea here is kind of similar. It's basically take land that was traditionally in the timber industry and basically allow these trees to grow longer before you cut them or don't cut them at all. And again, you have situations where trees that were never really at risk, land that was essentially parkland for the last 100 years is being enrolled for these credits. And then carbon credits are being issued to companies that are polluting that represented trees that were never really going to be cut down. And then for reforestation, the big problem with reforestation additionality is that a lot of these reforestation projects that we see are basically timber companies who were planting these trees anyway. So what good does it do to basically issue credits for trees that were already going to go into the ground? It doesn't offset pollution that was actually taking place. So we do kind of need answers to these questions, and it gets deeply complicated in trying to assess the additionality, because then you're coming up with alternate scenarios and you're looking at historical satellite imagery and you're making sure that it's all kind of above board what they claim. So
yeah, I mean, it's this problem of proving a negative or deciding which science fiction novel you want to believe that is tricky in this front. I wonder though, is it impossible from a neighborhood perspective around these projects just to know after every single year what the deforestation rate was and then just issue it that amount? Like, why is Vera due and other certification bodies, Sir Carbono, CAR, ACR, I think Global Carbon Council, et cetera, why do they why don't they do that? Why isn't there isn't that a simple solution? Sort of looking at this on a year by year basis from an issuance perspective.
Yeah, I mean that makes the most sense. I think to an extent. Every protocol is different, right? So most of their systems work by identifying reference regions that are supposedly similar to the project and basically seeing what happened to them. Of course, the problem is people draw reference regions in areas that are wildly different. Even if you're just looking next door, if your project's in a mountain range and you're looking next door at, very, very productive agricultural areas, then that's not a fair comparison. So I approach this from a very cold data science perspective, in which I am basically trying to use historical satellite imagery to inform my decisions. I think some of the diciest projects out there don't necessarily use data. They use kind of attestations of what would have happened. These can be verbal attestations. These could be, just kind of like documents signed off by the government or the state agency. And obviously, there's a lot of room for manipulation there.
Yeah, interesting. You brought up IFM projects and some of the projects in the Americas, especially in the kind of North American context, the U.S., Canada. My alma mater, the Nature Conservancy, I think got wrapped around the axle of exactly what you're describing, right? This additionality problem of what they owned it. Yes, certainly it wasn't legally protected, but it was owned by an NGO, and they certainly weren't going to, and they'd owned it for not long enough time that it wasn't sort of a deal where they bought it with the intention of, selling the credits and, which would have been a, reasonable financing of a protected area. That's certainly an issue. The IFM side, and I think that's fairly clear cut, right? I mean, if you're going into a transaction as an NGO and that you need the cash out the back end from the credits perspective, and you wouldn't do it otherwise, well, that's additional, right?
Yeah.
But if you've got a piece of park that you've had for 100 years or 50 years or 30 years, and you're like, I need some money to do more good work. Great. I'm glad you need more money to do more work, but probably not okay to kind of threaten to cut down trees in order to get credit. But on the IFM side of it, it's quite interesting to think about kind of additionality in the context of any first world nation in that context, right? Is it really the case that, and the US is one of the biggest issuers of forest credits on the planet. Is there any real credible case that any of those should be issued in the US? I mean, from an additionality perspective, aren't there enough commercial activities that would do just as good a stuff? Isn't there enough zoning, compelling zoning? Isn't there enough government money that would do all of these things? That why would you ever issue a credit in the US?
Oh, I think that the same case could be made that there's definitely timberland in the US that has been very aggressively harvested in the past and, basically needs to be protected. And likewise, there's a lot of agricultural land in the US that could be converted to forests in order to sequester a lot of carbon. So I'm not sure that the geography of it is the problem. The bigger problem is identifying the actual likely outcomes, which gets very dicey, of course.
Yeah, I guess I'm saying in the context of a wealthy nation that has the most of the resources in the world to deal with reforestation with carbon, and yet has taken so few actions like the United States. Is it? I find the whole notion that that anybody should be getting a carbon credit in America to be kind of bizarre.
Well, the U.S. government can't go and force people to plant trees on their land. It just doesn't have that level of power. And so if you can convince people to plant trees on their land that they wouldn't have already, isn't that removing carbon from the atmosphere?
But they can certainly afford to do it much more than Papua New Guinea can. And they can also, all of those governments in the U.S. Can zone in such a way for carbon. and have a rule of law zoning that would completely allow for that sort of thing, and put a whole set of incentives in place so you can do sort of carrot and stick. It's the wealthiest country in the world. Probably it's one of the biggest. It is the biggest per capita carbon emitter. It just strikes me as a hard additionality case to make at a global level. To have the U.S. participating in a carbon market alongside the Solomon Islands.
Yeah, I mean, if you're not zooming into the individual landowner, then I guess I could see that point. But at the end of the day, if you have to convince some like red state American to preserve his trees, he doesn't even believe in climate change. The best way to do that is with money, and you can do that. He's willing to sign the contract if you're willing to pay him not to cut the trees down. And from a climate perspective, a ton of CO2 removed here is a ton of CO2. I mean, it's the same climate outcome. Whether or not people should be paying the same amount of money, no. I mean, people should probably be supporting projects where, the co-benefits are probably, where the money could maybe go to a better place or get you more carbon. But people have different reasons for buying carbon projects. So, a lot of the time companies in California only want to support forests in California or that kind of thing.
Yeah.
There's different elements of risk, right? So American IFM projects, they have really dicey additionality a lot of the time, but the legal, the laws here make it so that they really don't fail in the same way that avoided deforestation projects elsewhere fail. If they did, they would just get sued. Right. So this is why some people prefer, American stuff.
Yeah, got it. No, fair enough. Let's take a short break and then come back. We've done I think about 35 or 40 minutes worth of conversation. We'll come back and talk about permanence, leakage, vintage, removals, and then the always interesting crypto NFT world.
Yeah.
See what we can do with that. Hold on, and we'll be right back.